Hi everyone, and welcome to our panel discussion. Subject today is boosting financial inclusion with alternative data ecosystems. I think we can look forward to a very dynamic, interactive discussion today. My name is Ben Moreau. I'm the Innovation and Global Scaling Director for Experian, based in Singapore. And we also have Winnie Wong, Country Manager for Vietnam, Cambodia and Laos from Mastercard, Ankur Mehrotra, Managing Director and Head of Financial Services from Grab, and my colleague Mohan, Jayaraman, Managing Director of Southeast Asia and Regional Innovation, Experian. I'm going to share a little bit of content as an introduction for myself, the session, and for the guests. So just bear with me 1 second as I put some slides. And so this was the summary of I guess expanding on a bit of the session today, the devastating economic impact of COVID-19. Customer profiles are drastically changing. Lenders will have an influx of new customers who did not need credit earlier but do now. In such unprecedented times, business as usual strategies will not be sufficient in predicting future credit performances. And at this panel, we'll be exploring how the financial community can create value from these new data sources. And just expanding on the topic a little bit. So financial inclusion, what we mean by that is the ability for a population to access financial products and services regardless of their economic situation. It can refer to further adoption and usage of the services, but also simply being able to access them at all, whether it's payments, credit inclusion, or insurance, and actually all of which of these areas we've got representation on our panel today. We also know that significant imbalances exist in financial inclusion within Southeast Asian markets between geographies, urban and rural areas, men and women, and small and larger businesses. And today's discussion is really focused on the role of alternative data to further advance financial inclusion and look to address the imbalances that I mentioned previously. Now, alternative data is a term that's used a lot. And I think historically, this was classified as non-traditional data sources used within the financial services industry, largely on the fringes. But certainly, as time has gone on, and certainly in the markets within Southeast Asia, these are becoming core and essential, and really should be called data at the moment. We're more frequently seeing importance and regularity of data contributed by consumers and SMEs, as well as collaboration models involving partnerships as opposed to traditional central public sector-led data sources. Digital adoption and the API economy are accelerating the access and adoption of the data sources, and so technological development is also critical in the data usage. We're observing regulatory enablement, consumer and SME behavioral changes, and private sector businesses that you would less traditionally associate with the financial services sector leveraging their data assets and becoming valuable contributors. We'll drill a little bit deeper into how alternative data really drives financial inclusion, how it really makes a difference, and the processes, the macroeconomic factors and collaboration models that I alluded to earlier, involving partnerships across various ecosystems that are essential to enable this. So onto the discussion and to meet our panelists. Firstly, let's get some context from our panel on who they are, what financial inclusion really means to them and their businesses with regards to the three main areas of payments, credit inclusion, and insurance, as well as they're really focusing to drive impact. Firstly, I will allow Winnie to introduce herself firstly and to introduce her areas of significance.
Sure, thanks, Ben. Hi, everyone. Thank you for joining us and thank you for having me here. I'm Winnie. I manage the Mastercard business for Vietnam, Cambodia, and Laos. I'm currently based in Ho Chi Minh City and have been here for the last 2.5 years, driving our digital inclusion and digital frontiers with Mastercard. So what does financial inclusion mean for Mastercard? Next slide, please, Ben. Yeah, so I think for the last, over the last decade, Mastercard has become a leader in financial inclusion. We started a journey because we saw the social and economic implications of being excluded. We have made significant commitments along the way. When we first went public, we created the Mastercard Foundation, focused on education and job creation for youth in Africa, now worth about $30 billion plus. It is one of the largest foundations in the world. 7 years ago, we created the Mastercard Center for Inclusive Growth to be our philanthropic hub, driving thought leadership and programs to tackle pressing issues of inequality. A key focus for us of the center is to support the economic mobility of workers so that they can navigate the digital economy without being tethered into to a place or a job. And in 2019, we took $500 million of the 2017 cut and commitment to the inclusive growth and included a creation of Mastercard Impact Fund. 5 years ago, we targeted to bring 500 million people into the financial system, and we achieved our target before our 5 years. And we have now expanded to bring a total of 1 billion people into the digital economy by 2025. And this includes 50 million small businesses and 25 million women entrepreneurs. Next slide, please, Ben. And, circling into SMEs, sorry, Ben, I'm not sure, yeah. So SMEs make up approximately 97% of enterprises, and yet we know that they have difficulty accessing credits and tools that are necessary for growth. So to us, having a bank account is not full financial inclusion for SMEs if they cannot also access capital and other financial products. And COVID-19 has shown that the SME sector has been extremely disadvantaged in this environment where millions of people and businesses are excluded from the financial system and the digital economy. Next slide, please. And in Vietnam particularly, we are focusing not just on SMEs, but especially on women entrepreneurs. And more so during COVID, we have upped our support for women entrepreneurs. Vietnam business owners performed well this year based on our Mastercard Index of Women Entrepreneurs. Vietnam made to the 9th place in women's advancement outcomes, which measures women's progress and degree of marginalization they face economically and professionally. And 26.5% of business owners in Vietnam are women business owners, and is ranked 23rd globally and second in Southeast Asia after Philippines. And amidst the pandemic, women entrepreneurs have shown the resilience and in prompt adaptation of the new and digital ways. So we've embarked in Vietnam on a long-term partnership with CARE International. And as an immediate response to COVID, we gave 1,000 women micro-entrepreneurs emergency funds to kickstart their businesses and to maintain their lives and their businesses. As an ongoing initiative, we have the Ignite Foundation, funded by the Mastercard Center for Inclusive Growth, to support women entrepreneurs, ensuring a landscape that promises greater opportunities for women entrepreneurs. We target strivers, which are entrepreneurs with 2 to 10 employees who are looking to grow their business, and we're looking to unleash the power of women entrepreneurs in major urban and peri-urban centers of Vietnam. So, and on a long-term basis, we work with banks and fintechs to tailor financial services products to SMEs and women in the financial system. So for us, financial inclusion is not just about getting bank access and giving them access, but it's also putting consumers and SMEs on a path to financial security. Back to you, Ben.
Thank you, Winnie. And on to Ankur. Would you like to give an introduction?
Sure. Thank you, Ben. And firstly, thank you, APIX, for having me here today. It's an honor and privilege. So I'll share a little bit perspective about Grab and how we look at financial inclusion. Specifically, we provide within Grab, we have a Grab Financial Group that has gone beyond credit, beyond payments, and incorporated insurance as well as wealth management as part of our holistic proposition when we think about inclusion. But before getting into that, firstly, when we look at Southeast Asia, it's home to some 630 million people with a growing economy, digital economy, and yet somewhere around 70+% of the region's population remains either unbanked or underserved, according to plenty of data out there. And And this is the segment that we are looking to address in various forms and fashion, right? So to us, what does financial inclusion mean? It really means helping these segment of the population, the segment of the customers, improving their quality of life through access that could be transparently and readily accessible to them. Yeah. And this could mean different things for different segments. It could mean safe and convenient way to keep and transact their money. It could mean ability to afford basic protection for the family, or it could just, of course, mean getting access to credit in a transparent and convenient manner. And I'd like to spend some time talking about that credit aspect specifically today. So if you move on to the next slide, please. So in our real vision, and I'm looking after at Grab our credit solutions that we have across the region and that we provide under the Grab Financial Group. And our vision is really to enable social economic advancement in Southeast Asia with simple and transparent access to credit. We deliver this in various different ways through our super app and the ecosystem that we have developed over the 7+ years of being in Southeast Asia, being truly entrenched in the economies that we operate in. Let's look at some numbers in the next slide, where we'll see, we have a significant percentage of the population that is either underbanked, underserved. Loan and credit penetration is a key pain point, given the lack of the multiple factors that we'll go into over in the conversation, which has led to this level of low loan and credit penetration. But at the same time, we have a very high level of digital and mobile first penetration as well. Now, again, next slide, please. When we look at, when I wake up in the morning and think about, who are our customers, who are we serving, these are the images, these are the stories that jump to mind. Today, Grab empowers 9+ million micro entrepreneurs through our ecosystem. These are micro entrepreneurs such as our drivers, our agents, or parts of the food delivery partners. They form the economic backbone, and many other small micro SMEs such as them form the economic backbone of our platform and of the economies that we operate in. While I won't delve into each of these people's stories, I'd really like to share Alicia, who's in the middle, and she's actually based in Ho Chi Minh. She is a mother of 3, wakes up at 2 in the morning to try and get the best produce for her stall, and she runs food stall for the last 3 years, and she's been on a platform from day one. Alicia did not have a bank account when she started a business. She was unable to get any sort of working capital when she first had their first small little stall or expand her business because she doesn't have fixed assets. She didn't even have a track record. She had no idea of how much money was coming in or going out or any way of proving it to any bank. Today, she owns 3 motorcycles that allows her to expand her business as well as help her support her family, get around town. And she's looking to open another 2 stalls. These are the stories that empower us to do the job that we're doing. These are the stories that really translate into financial inclusion and for us. And this is what really wakes us up out of bed in the morning. Thanks. Back to you, Ben.
Thanks, Ankur. Mohan, lastly, over to you to tell us about sort of financial inclusion and alternative data and what it means to Experian.
Thanks, Ben, and thanks actually to Ankur and Winnie as well. I think they've laid out the foundations of what I'll possibly talk about a little more in detail in the next couple of minutes. Maybe to start with an introduction to Experian, we are a 125-year-old organization, primarily focused on risk management. So if you'll remember, Ben, Ankur, Winnie actually referred to levels of financial inclusion, and we talked about the fact that possibly the first level is getting banking inclusion, so financial transactions. Perhaps the next level is insurance inclusion, and the next level to that is credit inclusion. The fundamental problem that we have been solving for the last 125 years is helping organizations get their fix on the credit risk of consumers And we do that holding information for about 1.3 billion consumers globally. We do that across 23 different geographies. We do that quite extensively with the work that we are doing on our innovation agenda, as well as the work that we are doing in the business side, so the whole entrepreneurship SME space. The backdrop that I wanted to give you is maybe something that will come through a little more clearly in the next slide. If we translate this whole credit world, and then we can move to the next slide, the financial inclusion agenda for this region, and when I talk about this region, I mean in the context of APAC, translates actually quite poorly. We have about 4.2 billion odd people here, and we estimate that about 30% of this have actually access to formal credit. About 6 in 10 are unbanked, so they don't have transaction inclusion, and perhaps about 7 in 10 are credit unincluded. We believe that hence it's as a problem to solve. It's one of the bigger problems that we believe has to be solved. Now, one of the big issues that we have in solving this is it's a bit of a vicious cycle. Data that comes in from the banking system typically feeds the ability to create a credit score. And that's something that we found wasn't easy to do in the APAC context, given that there weren't people who were banked. So if you only have 30% of the people who are banked, you can put in credit scores only for 30% of the people. The remaining 70% cannot get access to credit as a consequence. What we have hence been doing over the last couple of years is looking at the credit scoring, credit risks in a slightly different light. We have looked at it in the context of information that's available. Ankur referred to, for instance, the fact that telecom inclusion is fairly heavy in this part of the world. Winnie talked about financial transactions being fairly well penetrated in this region. And that's perhaps the route to the solution. If you look at the right side to the screen, effectively one thing that we have learned is the best way to solve this problem is to look at this ecosystem of alternate data that's available on consumers. A lot of the consumers might not have access to credit already from the banks, but they will be using telecom products. They will be using a telecom connection. They are likely to be using payment products in some form to electronically transact. They might be on an online website. They might be on a super app to take a cab ride or to order in something. Now, if we can put accumulation of this information and layer this one on top of the other, we have the ability to be able to develop a credit profile for the consumer that we believe is almost as representative of credit differentiation as traditional banking data. We measure this globally in terms of what we call a Gini. And we find that these alternate data models are now getting to the level of sophistication that we can use them by themselves for credit differentiation, for underwriting, and we believe they give as good a level of differentiation between a good consumer and a bad consumer. This is effectively hugely useful for the bottom end of the pyramid for the set of people who don't have formal banking information and whose alternate data we have to leverage in a big way to develop these alternate data scores, as we call them. If we move to the next slide, that talks about the complexity of the problem that needs to be solved. I mean, when we got into this space and we started looking at building the ecosystem that we need to pull together in order to solve this problem, the initial view was that we need data and data sources to come together. And our realization through the journey that we've had over the last about 18, 20 months is that data is one piece to the puzzle and one that we certainly need to solve for. And by the way, that's different for each country that we work in. So for example, within Southeast Asia, Vietnam has a slightly different profile of alternate data that's available to an Indonesia, to an India, and so on. Getting the right kind of data stack available for each country is going to be the first sort of piece of the puzzle to solve. The second one is trying to put together the analytical models that we need to put together in order to piece the pieces of the puzzle together. And again, I mean, that's something that we have globally a lot of IP in, and we've invested a lot of time and effort in. So what we do is use a lot of sophisticated algos, including ML and so on, to bring these different pieces of information together and put them together and broadly stack them up. So we get to the level where we have a consumer score that's available. There is then the whole theme of the fact that most of this has to be digitally available, so platforms become important. So that's the third big piece to the puzzle. And the last is the fact that most of this data is actually owned disaggregated. Unlike banking data that is owned by the banking system and has a single regulator, alternate data is not owned by a single regulator or by a single entity. So there is this huge challenge of trying to get different businesses together who will share your vision of what needs to be done in a collaborative model to take some of these alternate data stores out to the market. So we find that that's the other big piece of the puzzle to be solved for. So I just want to lay it out as the foundational work that we've done tells us that these four pieces are possibly the most important parts to bring together to create that ecosystem that will build up the ability to harness data, alternate data, and solve the financial inclusion problem. So that is backdrop. I'll hand back to Ben, and we'll possibly elaborate some of these points as we go ahead.
Thank you, Mohan. I will bring back the video for everyone. So hopefully we're back on. So coming on to the panel discussion. So I guess speaking about the importance of the data. So with the context that the digital financial services adoption is expected to treble in Southeast Asia over the next 5 years. We've touched on the fact that alternative data started off as on the fringes and is obviously going to need it to be central to drive this sort of scale. Which sort of alternative data sources do you all see as crucial to facilitate this growth at this scale? And it might help I know that it's a pretty general question to start off with, but it might help to use a couple of specific use cases to help illustrate a point. So maybe, Ankur, I might start with you on that one and then we'll go around the panel, if that's okay.
Sure, that's fine. Thanks, man. It's a very interesting question. When we look at alternative data, of course, it's a broad term. Specifically within there, and to a large extent, this is uncharted territory for many of us, right? But over the last couple of years of experimentation, and it's very important to have that experimentation mindset. We've found that generally the high velocity data, broadly speaking, tends to be quite good from a credit modeling perspective, and increase the efficacies of these or predictive capacities of these models as well. These sort of data points could be transaction data, which is quite critical, travel and telco data as well. And then the other bucket is, from a KYC or fraud authentication standpoint, mobile SDK data, that tends to be quite powerful as well from what we've seen. And as we go into use cases, within each of these aspects, I think rather than having just one sliver of a certain kind of data, say only e-commerce or payments data, or only transportation data, I believe from what we've seen, that's not as powerful as marrying these and layering these different types of data together to be able to form a more 360 and holistic understanding of a customer. Our early models leveraging such data, Mohan used the term Gini, showed Gini coefficients of north of 60, which is quite powerful, and hence we are very encouraged by what we see.
Thank you, Winnie. I might move on to you for your perspective as well.
Yeah, sure. Thanks. So, definitely agree with both Ankur and Mohan, and I think they've mentioned quite a few types of data from telco data to some of the public data that we have, and for us, and also transaction data. For us, I think one of the key, and of course Mastercard being in the payments industry, for us transaction data is going to be very key, especially for SMEs and MSMEs. Where if they're looking for funding and credits, they need to surface their business. They need to have a digital book of their business. Today, with almost 80% of transactions in Vietnam being done on cash, SMEs and MSMEs here experience what we call the tin foil syndrome, right? Ankur mentioned that in his example earlier of the lady, not having any information of herself and her history, but over time is being built up. So for us, that's a good starting point, and it's something that we can act on together with the banks and the SMEs to make sure that we are able to drive digital payments, cashless payments, so that more and more transaction data is surfaced, and traditional and non-traditional lenders can then use this to make the wise decisions.
Thanks, Winnie. So Mohan, we're hearing sort of high velocity data in layers. I think Winnie's echoing that with transaction data certainly fitting the brief there. What's your perspective?
I mean, you have a unique panel that's agreeing with at the stage. I pick up on what Ankur said, what Winnie said. I mean, those are the data elements that are of value. The transactional data elements that Ankur pointed out have a huge amount of value because they are high velocity. They add value over a period of time, and they are pre-credit. So essentially, I think those are the conditions. When we look at, for example, from our perspective, we've typically seen that the kind of data that makes a difference is one that's available in scale. So in some sense, covering a reasonable level of the population, or to Winnie's point, the thin file population. The other thing that's important is that it's differentiating and that it's got enough velocity, as in comes in more frequently to make a difference. One of the things that's worth pointing out, and we've learned from experience, is that to an extent, each economy seems to have a slightly different data map that's needed, and that also changes slightly by the customer segment. So, for example, if you look at the let's say the urban entrepreneur community that's broadly at the bottom end, perhaps you'll find, to Ankur's point, more information that might be available in, say, super apps, might be more information that might be available from the telco side. You'll find with the rural population, things like, for example, payment products are good to target. They give you a reasonable sense of where you might be able to go with that. So, I mean, I think the broader point that I leave is, I believe that this is a problem that has to be locally solved. Each economy has a slightly different version of the data stack, and each customer segment, as you get to it, especially the thin file segment, has a slightly different coverage from an alternate data standpoint, and it's important to see if you can actually get that data map right. Our biggest learning, again, perhaps picking up on Ankur's point on high genies that you need to get to. Credit differentiation and the quality of credit differentiation is very important. And it's absolutely critical to get to that place where you're able to pinpoint the kind of data and the kind of data sources that best describe that customer segment in that economy. And there's a bit of a secret sauce that's associated with trying to get there. And we believe that there is a certain level of experiential information that will take you there.
Thanks, Mohan. Maybe we'll stay with you for a second, because I think you're moving into, I think, the next question there. So we've spoken a lot about the data. We've also already mentioned things like genies and the analytics that needs to be in place, and the sort of data sets that we're talking about here that are high velocity, high volume. The analytical capability and infrastructure that needs to be in place is crucial in order to get the insight and the value and be able to deploy those insights for that. I guess the question then is, what are the crucial elements that need to be in place, and what do you think is going to be even more crucial in the future as more data sets, more volume, more velocity starts to come into play here? What are the key analytical elements that we need to be thinking about to drive this?
It's a great question, Ben, and I think in some sense, what you're asking me to do is order the 4 points that I called out earlier, right? I mean, we talked about data being important, analytics being important, and so on and so forth. Platforms being important, and perhaps partnerships, collaboration models being most important. I mean, if you ask me to rank order this from our learnings, I think the most important part perhaps is the collaborative business models. I mean, for example, through the COVID period, one of the things that we've seen is a lot more of organizations are a little more open at both ends. One, in trying to look at using their data and adding to the mix of what they can bring into the alternate data world. And at the other end, they're also open to picking up new signals from alternate data. So, for example, where they are in the lending business, they are a little more open to trying to pick up these signals from this alternate data. And I think if I were to, like I said, rank order this, I would say the most important thing is certainly the ecosystem evolution to the place where collaborative models can work well. I mean, if you go back to the credit bureau example, why did the credit bureaus start working well? They started working well when banks got to the place where they could collaborate with one another and ensure that they started building the models. So, I'm not going to trivialize the data or the analytics work that's involved or the platform work that is involved. I think there's a lot of work to be done there. But the ecosystem movement, in my opinion, is largely driven by the collaborative models that we can get to move within a market. So I think that starts it. Everything else can be something that you can add in. You can't bring a market to maturity ahead of time, if that makes sense.
It does. And Winnie and Ankur, what are your thoughts there? Disagreement on the panel, by the way, is completely completely okay and encouraged. But do you agree with Mohan on that, or do you have some different thoughts?
Yeah. So, well, in fact, I want to. Unfortunately, I don't disagree. And I do want to bring out another thought or another factor that I think is not covered is public-private partnership. I think the role of the public sector, the governments, are very, very crucial as they embark on this journey and this ecosystem. There's only so much on a private enterprise or private entities can do, and all of us are doing whatever we can within our means and within our scope. But the government, has its own roles to play, and in the SMEs, for example, right? There's a lot they can do to encourage SMEs going digital, not just on digital payment, but digital overall. Tax incentives, for example, is a very effective measure. Or rather reduced tax, more specifically, it's a very effective measure in some countries that we have seen. And we've been trying to encourage some of the governments here to encourage some of these measures to encourage the SMEs to go online and to go digital. So yeah, public-private partnership, I think it's one.
Thank you. Ankur, your thoughts?
No, absolutely. I think no one can argue with collaboration and working in a collaborative manner to enable the economy further, right? I think I wouldn't argue with that, but at the same time, I would also add that there are a couple of things, if we think about within the analytical framework, more specifically, what are the things that as an organization or as a business wanting to harness the power of alternative data that we need to, from a credit perspective, that we need to focus on. There are a couple of things, right? Like one is, and maybe I'm being too nuanced and specific, but I think it's important to highlight things like, from a financial institution, often overlooked ability to ingest multiple sources of data in real time, as opposed to in batch processing at the end of the day. Ability to have that ingestion layer or an API layer, which will be able to get external data, internal data, bureau data, all into a decisioning engine, which will allow us to, credit decisions in real time, based on perhaps certain KYC information, which is in Singapore mindful, but in other markets also governments are bringing this to life. That becomes a very critical layer to be able to harness the power of alternative data. If we are not able to do that, then there's a lag process, right? And the second is also an appropriate consent framework. It's often overlooked, but for any large and growing organization or fintechs, I think having that right sort of consent framework from consumers to SMEs or merchants, any users would be quite integral as well to build that in your sort of core infrastructure that we have.
Thanks, Ankur. Just want to extend on a point that Winnie was making there, and it's come up in some of the earlier answers as well, is the role of the ecosystem. So we've touched on the importance of the data and how collaboration is essential, and then the analytical blocks that are required. But this always exists within an ecosystem. The data doesn't exist within isolation. And we've already mentioned a few players that are important for that: banks, regulators, private sector, and I think even consumers and SMEs themselves are now becoming more empowered to be contributors as well. Winnie mentioned the role that she'd like to see from regulators to try and drive this further. Maybe Mohan, Ankur, your thoughts around where in this ecosystem would you like to see sort of more positive change to help drive this adoption? Maybe Mohan, if you'd like to give your perspective first.
Sure, Ben. I think it's I believe it's a great point from a Asia Pacific standpoint. I think coming back to your observation that alternate data in the region is actually data. I mean, if you look at data privacy regulation globally versus in APAC, I think it takes a different hue in APAC, where you have a financial inclusion challenge to go after. And we are already seeing regulators face into this. I mean, if you look at multiple governments, they have, to Ankur's point, built eKYC fraud detection systems. And I think that forms a sort of basic backdrop of what can be done. The other thing that I believe will have to happen is regulatory comfort in the use of alternate data. And I think it's a matter of time and perhaps experience of the regulator with this kind of information. They are comfortable with banking data. They haven't really seen credit information through cycles on the alternate data front. Perhaps regulators facing into some of those and looking at building the infrastructure will be good. I think the third piece to the puzzle in some form, I believe, is the right kind of data privacy consent regulation. To not go overboard or underboard, if I can put it that way. And making sure that we have the right kind of broad infrastructure capabilities that are put in, that will give comfort to the entities that are actually working with the alternate data, that you can legally work with them and make the right kind of decisions using them. I believe letting that the sort of stacked up view develop will be useful. So both, on all three places that I indicated, for example, the base ecosystem around fraud identity, around giving comfort to lenders and using alternate data models, so the analytical models, as well as in the right data privacy regulations. And to be fair, I think regulators around this region, I believe, are facing into this quite well. Possibly, MAS taking a big lead there in terms of some of the constructs that they are putting in place, including the Veritas initiative and so on. But there's a lot that's going on in that space that I believe will be hugely productive in everything that we are talking about.
Yeah, absolutely. I think I totally concur with Mohan in terms of the support that we are seeing from the regulators across the region. I mean, MAS was without saying is very forward thinking in that space. Also in Malaysia, we were very encouraged with what we've seen. Different regulators really accelerating innovation to improve inclusion, particularly during this COVID time. Especially in Malaysia, I mentioned that we recently received the approval for a license, which is a non-banking money lending license, but to be able to operate and do digital lending in Malaysia. That's a first time that such licenses have been given out, and kudos to KPKT and Malaysian regulators who were able to really accelerate that discussion very quickly in spite of COVID circumstances, right? And when you ask about what else, what would we love to see, more such initiatives, more such digitalization frameworks and regulations which permit financial institutions of all sorts to be able to do your digital KYC, digital onboarding, digital deployment within the right framework, with the right checks and balances, of course. That's what we would love to see, and that's where we think if we work with regulators, we'll be able to kind of bring about inclusion in the future. Yeah.
Thank you. I think it would be remiss not to mention the reason that we're all on a virtual panel today and not sitting in person having this discussion, but the role of COVID-19. Necessity breeds innovation, and it breeds and accelerates change. And we've seen huge changes in the past few months due to the factors and the environment that COVID-19 has forced upon us. I'm interested in how you're all thinking differently now in terms of linking alternative data to financial inclusion than perhaps you were a year ago, and also what future changes perhaps we should expect as well. Maybe Winnie, back to you to begin with on that one.
Yeah. So I think for us, I don't think we have changed any of this because we've been on a digitalization journey anyways, right? If anything, you know, I know it's very cliche, a lot of people say it, but it is absolutely true for us that it has accelerated our journey, right? Whatever that we thought was going to happen in 2 years probably is now starting to happen now. There's definitely been a lot more conversations. There's definitely more awareness amongst the SMEs on the importance of digitalization. For example, in Vietnam, like I said, it's still a very cash-based economy, where food delivery, for example, is cash on delivery, right? But over this period, suddenly everybody is scrambling to go online. You know, retailers are now starting to offer online platforms. So this is definitely accelerated for us. But I do want to touch on one point that Mohan said earlier about the consent, over or under consent. I think the other thing that we have seen now is that with COVID, and especially in this environment where a lot of us have to do things that we may not necessarily be comfortable to do before, like checking in certain places, you know, telling everybody where we are, telling the government where we are. But right now, nobody's questioning, at least in this part of the world. You know, and I think it's been proven that if you can show the consumers or the SMEs why they should go digital and why you should give up some of these consents for your benefit, for your security, for more credit line, I think that's another, you know, eye-opener for us over this period.
Sure. Mohan, Ankur, acceleration of the existing strategy, does that align with you?
Yeah, absolutely. I mean, we were already on the path of accelerating, so we you know, really pushed the pedal to the metal, so to say. But I think what we see, certain products that we had in our roadmap, we did bring some of these products forward because we see a need for it in the market. You know, whether from a credit point of view, shorter tenor, bridging sort of loan facilities, or using alternative data again, which is essentially where we play, to provide certain products which would help, you know, SMEs, micro SMEs, which are in dire need, bridge the sort of COVID crisis. And same thing on the consumer front as well. We've seen consumerism not necessarily die away or fade away, but really come back in a big way. And the e-commerce wave come back in a being very strong and powerful during this time and actually picking up. So we've rolled with certain products which are more bite-sized products, buy now, pay later type products that we're rolling out to ride that e-commerce wave, and it's really accelerated that for us.
From the Experian point of view, Ben, I think that's it's actually you know, maybe to Winnie's point, it's just accelerated everything that's happening in the market. I mean, for example, what we are seeing is yes, these scores make sense. Can you give it to us fast enough across different markets? So across Indonesia, now across Vietnam, other markets, and so on. The other thing that's being seen as a huge requirement is availability of these services on a SaaS model digitally end-to-end, if that's possible. Again, I mean, we're doing a lot at this point in time to accelerate what we were already bringing in, again, to Ankur's point, Winnie's point. So it's I think accelerating it, there's a lot that's happening to take it online and to make the consumer experience a little better. I think that's maybe the third angle that's getting introduced, which is make that process a little easier, as I see it.
Thank you. Everyone, we've reached the end of our time. I feel like we could have carried on this conversation for a much longer time, but thank you so much to the panel, Winnie, Mohan, Ankur. Really great discussion, some really great insights and points of view there for the audience to take away. So thank you, and thanks to everyone that came to view.
Thank you.
Thank you very much.
Thank you.